بسم الله الرحمن الرحيم والصلاة والسلام على رسول الله وعلى آله وصحبه ومن والاه. Assalamu alaikum wa rahmatullahi wa barakatuh everyone. Welcome in this webinar and good afternoon for everyone. My name is Abdullah Muhammad, founder of Mayamen Marketing Management. We organize events and webinars in Islamic finance and other industries. This webinar is an introductory webinar to more interesting webinars related to different aspects of Islamic economy and finance. For keeping yourself updated, you can follow us on our pages in LinkedIn, Facebook, and Instagram to get the update information about our upcoming events, inshallah. We begin with introducing our panelists today, starting with Professor Mehmet Asutay, who is a professor in Middle Eastern and Islamic political economy and finance at the Durham University Business School. Professor Mohammed teaching research, publications, and supervision of research all falls within many Islamic economy aspects. He wrote, edited many books and articles also related to different topics of Islamic moral economy and Islamic finance. Our second panelist, Dr. Ziyaad Mahomed, holds a PhD in Islamic finance from Malaysia. He has specialized in Sharia advisory and has gained experience in almost all sectors in the Islamic finance and investment industry. He presently serves as Associate Dean and Director of E-Learning and Executive Education, and as Assistant Professor and the Head of Islamic Social Finance in INCEIF. Our third panelist, Sheikh Moosa Khoory, he is currently head of Shariah at Dubai Islamic Bank and holds master's degree in Islamic law and legal theory from University of Sharjah. Let's start with our first question to Dr. Ziyaad from academic perspective and Brother Moosa Khoory from practitioner perspective. What are the objectives and main principles of Islamic banking compared to conventional banking?
Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala Sayyidil Mursaleen, Sayyidina Muhammad wa ala alihi wa ashabihi ajma'in. Ma ba'd. Thank you very much for the opportunity to discuss this very important and relevant topic. The differences between Islamic and conventional, particularly from the academic perspective, are that we would need to ultimately achieve the pleasure of Almighty Allah. So the process with regards to distinguishing between what is Islamic and what is conventional is to ensure that we adhere to the laws and injunctions that have been revealed within the Sharia or the Islamic law. Now, when we look at it from an academic perspective, we say that the theory must be abided by, and that means that the law must be followed. And in order to follow the law, we follow simple legal maxims in order to identify those differences. So for example, that first legal maxim that we may want to consider would be that maxim that is referred to as dar'ul mafasid muqaddimu ala jalbil masalih. In other words, we need to prevent harm, prevent corruption, but then we need to do good as well. So Islamic finance will have to ensure at all times that it achieves this. But then we move on to the second legal maxim, which says that everything in social interaction or transactions is permitted unless there is a specific prohibition. So theoretically, what we're doing in Islamic is to determine whether we can identify any prohibitions in a transaction, any structure, any product, and if those prohibitions are there, we recognize them as impediments. So we either remove those impediments and have a clean product, or we have to start over all, from the beginning. So theoretically, we follow this kind of structure to determine those differences. Naturally, the biggest prohibition in Islamic finance is that of riba or interest. But then we go down the line and we ensure that we stay away from what is referred to as gharar. Gharar is a huge word that encompasses so many prohibitions: the prohibition of uncertainty, excessive speculation, ambiguity, ignorance in transactions, deception, whether the assets exist or not. So it's a huge discussion in itself, gharar. And then naturally, maysir or gambling is another prohibition. So we're looking at transactions to determine whether that element is evident, and if it is, we need to remove it or replace the contract. Gambling might be easily understood as something you do at a casino or you place bets, but how does it apply to finance? Well, in Islamic finance, we know that the Islamic Fiqh Academy resolutions look at different products, and they have identified gambling within some of these products. For example, resolution number 9 of 1988 talks about the prohibition of conventional interest. And here, one of the elements is that of gambling. So interest is, insurance is prohibited because of maysir or gambling. So these are the key elements. There are many other prohibitions that we look at, like contract law, and determine whether we have contracts that have underlying assets that exist as the rule. We have exceptions to those rules as well. But ultimately, in summary and in a nutshell, what we look at is really that concept of money. Because we use underlying contracts to achieve relationships, we determine whether that concept of money involves any rental of it. Rather, we are interested in what money can actually acquire for further leasing or further sale or further equitable partnerships. So what it can do rather than what it can be rented for in itself. And that is perhaps a very key difference between Islamic and conventional banking. I'll stop there. The topic is huge. I'm sure the honorable speakers will cover many of the other aspects as well.
Yeah, Brother Moosa, if you can also comment on this.
بسم الله الرحمن الرحيم الحمد لله رب العالمين صلى الله وسلم وبارك على نبينا محمد وعلى آله وصحبه أجمعين. First of all, السلام عليكم ورحمة الله وبركاته. Thank you, Abdullah, and the whole team of Mayamen for inviting us to this platform. We are honored and privileged to be with you speaking to our esteemed guests. I would say whatever Professor Ziyaad mentioned, mashallah, is spot on. It's exactly what I wanted to say, but I may add some bits to it from a maqasid perspective. So the maqasid are the main objectives of the Sharia from the people who follow Sharia, the Muslims, in certain fields and in certain areas. So Ibn Ashur was one of the pioneers in maqasid in the Islamic history, and he has pinpointed around 5 maqasid for the financial sector. All 5 go back to the mother of all the maqasid in financial transactions, which is the justice, the al-adl. And riba was forbidden actually because it lacked adl. In Surah Al-Baqarah, Allah subhanahu wa ta'ala says about riba, لا تظلمون ولا تظلمون. We have prohibited riba, so you will not oppress others or treat them unjustly, and you will not be treated unjustly from their end. This clearly shows that riba was forbidden due to this. And all the other 4 other maqasid that Ibn Ashur mentioned and stated go back to adl. I'll give you some examples. So he mentioned one of the maqasid to be al-wuduh, which is transparency. And if you think about it, transparency is nothing but allowing both parties to know exactly what are their rights, what are their responsibilities, and then based on that make a decision whether to go into the transaction or not to go into it. And this facilitates justice, because you cannot treat someone justly if you are hiding some information or you are trying to trick him through some way or another. I'll give you one more example. Ibn Ashur also mentions one of the main maqasid of financial transactions is al-thabat. Al-thabat is that when you give rights and responsibilities, you continue acting upon them. You don't say something in the contract and then negate it, or you don't promise something and you don't fulfill it. And all this fulfills the justice maqsad. So at the end of the day, this whole Islamic finance industry is based on values, and justice being the core of those values. It is a system that is based on all the highest values that humankind, not only Muslims, humankind can contemplate on and comprehend and approve. And the moment that you see a player in this industry that is not adhering to the international values, then you can simply say it is not Islamic, because it has not followed the spirit of the Islamic religion and the Islamic finance industry. It has maybe taken the legal perspective. It has maybe adhered to some conditions and terms here and there. But at the end of the day, we are, as Muslims and Islam as a religion, and God does not ask us to pray 5 times and then at the end of the day, don't change our manners and behaviors. Likewise, in financial transactions, we are not asked to follow words and letters and forgetting the bigger meanings of justice, of transparency, and so on. Thank you.
Yeah, I believe also Dr. Mohammed also has an opinion regarding this. Let's give him the mic.
Okay, Assalamu alaikum, thank you very much. I think as we have seen, we have a fiqh position. Fiqh establishes the rules and regulations in relation to how to move capital. And then the maqasid perspective provides the substantive morality in terms of what consequences that we want to achieve. I think, therefore, the totality of this, most of the time, as Sheikh Moosa mentioned, we heavily focus on the rules and regulations, the fiqh perspective, but the substance part is missing. And therefore, the objective function, if we start with the objective function, what is the objective function of Islamic finance? It is very much achieving that broader objective of justice. And justice, but coupled with ihsan. How much beneficence on top of that we can do to achieve the social equilibrium in the society. And that's very interesting because historically, of course, every society have faced the problem of moving capital from one place to another. And each society, therefore, or each tradition, each religion impose certain regulation as to how that movement of capital can be made. And the same problem, of course, faced by Muslim societies with the revelation of Quran, because Quran directly brought the whole idea of establishing that justice together with ihsan in the society. And therefore, defining what is capital before moving to capital, defining what is capital. And that is very much the concern of the, should be the concern of the Islamic finance. And when we look at, of course, with the prohibition of interest, the whole objective is to define capital. In other words, the hegemony, because capital with the riba has the hegemony of imposing itself in the society on the other stakeholders and the factors of production. So in a very simple manner, if the factors of production, land, labor, capital having the prominent role of defining the economic activity. That has been the concern of Islam as well as other religious traditions. Therefore, with the prohibition of interest, in order to achieve that justice, the prohibition brings down the hegemony of capital to the similar levels with other stakeholders, so that none of the stakeholders can be dominant or hegemonic over the other. Because at the sight of Allah, everything that is created by Allah and nothing can be dominant over the other. So therefore, the essence of the Islamic finance is very much the reflection of the Islamic worldview based on Tawheed. Because under the Tawheed, Allah is the creator of everything, and therefore, in the sight of Allah, and therefore the articulation in the world, none of the stakeholders, none of the factors of production can be dominant over the other. That dominance would be against the whole Tawheedi understanding in the sight of Allah. Because Tawheed talks about the complementarity, enriching unitarity. complementarity in the sense that capital will complement labor, labor will complement land, and therefore you have this, rather than competition between different stakeholders, what you would have a complementarity to achieve the unity that Allah is expecting from us. And therefore, Islamic banking in its essence, in its spirit, is not simple, just the functional forms of how we can avoid not to charge riba, but it goes beyond that. It goes beyond that to the whole area of the objective and the worldview. And in that worldview, therefore, we have to locate Islamic banking and finance and our financial behavior within that. Because when we talk, we entirely focus on the institutions, but as Sheikh Moosa mentioned, the behavior of individuals at the same time, as if we are pushing the entire realm of banking and finance, or the financial matters, to banking and financial institutions, but at the same time as individual, how we have to act as well within the spirit that I have identified, and how therefore we can achieve that justice. Because at the end of the day, riba prohibition relates expropriation, taking the rights of others into your realm, and that is haram. That is not acceptable. Expropriation is haram, and by riba you are creating expropriation, therefore it is unjust. Why you are creating expropriation? Because as the capital owner, you have the domination. You are dominant, such as neoclassical economics and the conventional finance is based on the dominance of capital. However, with Islam, therefore, bringing capital to the same level, establishing that equality between different stakeholders, that is an important objective function as identified by Maqasid al-Sharia. And therefore, it is huge philosophy rather than just the instrumentality of prohibitions, but how those prohibitions can be located within the Islamic objective function that Islamic worldview defined for us to reach normativeness. Thank you.
Thank you, Doctor. The second question will come from Sister Farah after introducing herself, our co-moderator, Farah. Please.
Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Fiona Farha Kirubi, and I'm a partner at Gateway Global, which is a professional services advisory firm that focuses mainly on developing Islamic finance and the halal economy across the globe. We are, however, headquartered in the UK, but my region of focus is Africa. And I am the current head of FinTech and leadership development for Africa. And I'm very active with Gateway's Conversion Factory, looking into our digital strategy, gender equity and inclusivity, social responsibility, as well as impact practices. And my mission really is to deliver innovative solutions to communities, institutions, and the governments that we work with. And I'm very excited to be co-moderating today's session. Abdullah, thank you so much for the invitation. And the subject of the difference between Islamic banking and conventional banking has been long contested, and is actually a subject matter that just a few years ago, prior to my exposure and further education at INCEIF, I too had many questions. And very grateful that we have both the academia as well as the practitioner aspect of the subjects and the questions that will come about covered today. So I want to thank all the panelists for making time today and for starting us off with the key differences. My next question is, given what was shared, and this is to Brother Khoory, is it safe to assume that the product structures differ between the two banking systems? And if so, what are the most common products for Islamic banking and why?
Thank you, Sister Farah, for the introduction, and we are privileged to be in this platform as well. First of all, when we speak about structures of Islamic banking, we can confidently say that the required structures are available and are executed within the Islamic banks around the world. But there is a bigger issue that we have to look out for. We as Islamic banks operate in an ecosystem of conventional banking and capitalism. And in such ecosystem, you cannot implement Islamic banking in all its different perspectives for a very simple reason. I'll give you an analogy that will make things easier. If I am doing cycling in a track that is not built for cycles, but in a normal paved road, then I cannot say that I can utilize all my cycling options and features in such a paved road, because it wasn't created for me in the first place. Again, the Islamic banks are trying to operate in a model that is based on debt, that is based on interest, that is based on risk aversion. People who enter the system as investors, as depositors, are refusing risk. And we as Islamic banks say we will take risk. This mismatch is not working out. And due to this, we are doing our best to operate our structures in an Islamic way, but at the same time, trying to mitigate the risks so it will also fulfill the needs of the investors and the requirements of the depositors. So why I'm saying all this, because if tomorrow you say, Moosa said that those products are according to the Islamic structures, but you feel that they're a bit going in roundabouts and U-turns, then just bear in mind that we are operating in a model, in a system, in an industry that is not meant for us. And until we create our own ecosystem, we will not be able to operate in a full option and full feature manner. You asked another question, Farah, which relates to what is the most common product. When Islamic banking started, the most common product was the simplest one, which is murabaha. Just like a trading company will do. It will buy something from a wholesaler and sell it as a retailer to the market. So Islamic banks do the same with cars, with real estate, with goods. They buy it from the supplier and they sell it to the customer with a markup profit. But today, this is not the most common one, because today people are more sophisticated and even the products are more engineered maybe. So we have cash finance now. We have now sukuk, and we have now bigger mudaraba and musharaka products under the deposits umbrella. So maybe those three are the most common now. Thank you.
Thank you. Abdullah, you can ask the next question.
I think, can I just follow Sheikh Moosa's position? Is that possible?
Yes,
just
of course.
Comment on it. I think Sheikh Moosa identified an important constraints that we are facing. It is true that we all criticize Islamic banking for not fulfilling the larger worldview that I try to identify. But at the same time, the realistic school suggests that, look, this is the reality you have. And within this reality, you have to operate. Because when we look at, in recent weeks, we had two prominent figures of founding fathers of Islamic banking passed away. And together with them, the academics, when they looked into how to realize the whole promise of banking and finance in the everyday life of the Muslim people in the modern world, they face the problem that Moosa identified. In other words, you have structures in front of you, which is not organically representing the Islamic worldview. So on the one hand, you want to organize something organically as part of the normativeness of Islam, how the normative part is identified through the position in the by my colleague, but then the spirit, and then you have a particular structure. So what you have with the analogy Sheikh Moosa identified, you have to fit into that. What we call is the grafting process. In other words, when you cannot develop your own organic structures, then you have to fit into the existing structures. And the existing structures, unfortunately, graft you through. And the existing structure, of course, based on efficiency and maximization. On the other hand, when we started our discussion, Islamic worldview, we mentioned the word justice and the fairness. So as you can see, entirely two different paradigms. So you have the paradigm of the Islamic objective of the defining human in a particular way and their economic and financial behavior in a particular way. And that is equity, that's fairness, that's justice, that's ihsan. And on the other hand, you have a paradigm based on whatever it is, as long as you maximize, as long as you achieve efficiency, and that can be at the expense of other stakeholders. However, in the Islamic one, you are saying that no, stakeholders, you have to treat them equally because Allah created them under Tawheed, they are complementing each other. So therefore, here you are talking about the sharing and participation economy. Here you are saying that no, we have to maximize the only the shareholders' value. And therefore, you have two different paradigms. But what was faced in 1970s with the founding fathers, whether academic or on the professional, have to realize that in the existing structure, because in my discussions with them, what was communicated to me that in 1970s, you couldn't go to any Muslim country and say that, look, we want to create entirely an alternative system. No one would have bought that idea. And therefore, they had to fit into the existing opportunity space. And that opportunity space, of course, shaped the nature of what you can offer Islamic, how you can fulfill the Islamic objectives. And therefore, that has become a huge constraint for us. I mean, let's look at Basel, for instance, okay? Basel, we have to look into what is Basel and who is. Basel, when you look at a number of bankers, they have come together, they established this institution, which aims to provide standards and regulations for the banking industry. Of course, it has a particular objective function. What is that? It's shaped by the hegemony of capital. On the other hand, in order to be able to survive in this particular road, as Sheikh Khoory mentioned, so you have to fit into that. But when you fit into that, of course, then you have to give up your certain objectives. But the question is, not only for Islamic banking, but the entire global finance, why they have to follow certain rules imposed by a committee which does not have a legitimate jurisdiction? Who gives them the right to establish that jurisdiction? So this is a very comprehensive, very global question that we have to look into. And then how, therefore, Islamic banking and finance have to fit into such imposed jurisdiction to be able to work. And therefore, what you need to then, in the end, you have to give up certain parts of what we call in the grafting process. So rather than ontologically constructed institutions and finances, so what you have, the bottom-up process, because the market conditions shaped by such rules and regulation forces you to fit into that. And then, of course, the tension in terms of how to realize those objectives. And therefore, then we have to bring all this fiqhi position to go around to make it and find solution. But in the end, our customers, the individuals, we as individuals, we are also very much grafted by the market conditions. As Sheikh Khoory mentioned, what happens, initially people were happy with the murabaha-based contracts, but now they want to have cash because we, as individuals, we want to go on holidays by borrowed money from Islamic banks and etc. So our behavior as well, at the same time as Muslims, because we are shifting everything on the institutional part as a solution, but as behavioral aspect of the individual Muslims are very much important as well. Further grafting, because individual Muslim behavior is grafted in the market, then we are also contributing to the grafting of Islamic banking and finance, and still we are pushing away from the ideals that we want to achieve as well. On the one hand, we have an amazing ideal world in which you want to create an alternative system. On the other hand, existing structures, as well as we under those structures, forcing and grafting Islamic banking and finance further into financial area rather than fulfilling the goals. That's the goal of maqasid or the establishing kafidi implications. Thank you.
Thank you, Doctor. Okay, to give the audience a practical understanding of differences between Islamic banking and conventional banking, let's take an example of financing a product. For example, in some of the banks, they have mortgage or car financing. How does the financing differ? And are there differences when one defaults from their financing obligations? It happens many times that the people, they cannot pay this amount for the banks. So Sheikh Moosa, can you give us some ideas?
Yeah, sure. Thank you, Abdullah. So let's say in a conventional bank, a person would like to come and avail finance for a car, to purchase a car. He will come to the bank and present his request as an application, and he will mention the amount that the car will cost. He may require to also attach a quotation, and he will get the amount. He may need to mortgage the car in order to have a security and a collateral just in case he defaults. And then the installment plan will be agreed upon. And if he is late in paying any of the installments, then he will have to pay a penalty. So this is in a nutshell what happens for car finance and other types of finance in conventional banks. Conventional banks have one product only. It is loan with interest. It works in cars, in homes, in goods, in other areas similarly. In Islamic banking, the story is different. When the customer comes to the bank, the first thing the bank asks the customer to do is to show some seriousness in entering this transaction, because the bank will go and buy the car. So the bank will actually become the owner of the car, and if this customer does not fulfill its seriousness, and we call it in Arabic al-jiddiyya, then the bank will be owning an asset that it's not supposed to own in the long term. Maybe in the short term, yes, just to take it into its books and then disposing it again to the customer, but not to own it in the long term. So what happens is that the customer will have to bring, along with the quotation and the other papers, he will need to sign a promise to purchase the car that he has shown some interest in from the bank that he's seeking finance from, after the bank has purchased that same car from the dealer or from the supplier. And the bank will in most times request the customer to place a deposit amount. This deposit amount in some cases is considered to be refundable, and in some other cases non-refundable. And it's refundable after the customer fulfills all his obligations under the murabaha. This whole transaction is called murabaha, which is taken from al-ribh, which is profit, because the bank is buying something with a cost and selling it with a profit. So after the customer fulfills its promise by purchasing the car that the bank has purchased from the supplier at cost, let's say 100,000, and then buys it, let's say at 110,000, of course with an installment plan, then only this amount that the customer has given as a deposit is returned back to him, or maybe considered to be part of the installment that is to be paid. In case the customer does not fulfill his promise, what happens is that the bank sells the car in the auction, and whatever price the bank gets from the auction will be compared with what it was supposed to get from the customer. If there is a shortfall, then the deposit will be used to compensate the bank. If there is no shortfall, then the bank will retain the full amount and will return to the customer its deposit. Having said that, if the customer defaults and doesn't pay on time in any installment, then the bank, before 7 years, didn't have any late payment fees. Today, the Islamic banks have introduced some form of late payment fees due to a phenomena that happened the phenomenon that happened is that customers who were banking with both conventional and Islamic banks used to pay the conventional and leave out the Islamic, because they say Islamic banks are patient and they are generous and they are kind. They will not follow me, they will not charge me, and they will not file a case against me because they have akhlaq. But the problem is that when you have a customer base, not of one or two, but thousands who take the same approach, Islamic banks' books start to get impacted, and Islamic banks CEOs started to seek some opinion from fiqh, from the Sharia boards. So the Sharia scholars have constituted a team and a workforce, and they researched the subject and found in the Maliki school of thought that there is the opinion of imposing charity on someone upon a condition that he doesn't fulfill. So if you say to someone, you will pay 200 dirhams to charity if you do not fulfill XYZ condition, this is allowed in the Maliki school of thought. So they introduced in all the contracts that if the customer does not pay on time, he or she will not pay the bank, but pay the charity association XYZ amount, and the bank will be the agent of collecting this amount from the account of the customer and then transferring it to the charity association. This by itself have stopped this whole habit or phenomena of people banking with both industries, not paying the Islamic and only paying the conventional, because at the end of the day, there is some money leaving their pocket above their finance amount, which made the Islamic banks comfortable again that they were receiving their funds on time, even though the extra was not going to their pocket, it was going to the charity. So this in a nutshell is the murabaha. I just summarize the murabaha itself. The bank is approached by a customer who's interested in a car, let's say. The bank asks for a promise with the amount to be deposited in order to check the seriousness of the customer and going into this transaction. The bank then buys the car from the dealer or the supplier, and then the bank invites the customer to come and buy the car from the bank on cost plus profit basis, and then the installments are followed during the term of the finance. If there is a delay, then a late payment fee is paid to the charity. It's taken by the bank from the customer's account and transferred to the charity association. Thank you.
Most welcome. Dr. Mohammed, do you have any reply to this statement from Brother Moosa?
I think Brother Moosa explained very well. Of course, these are, again, as we mentioned, conditioned under the market conditions, and therefore how much Islamic finance can generate a much authentic ways of dealing with finance. At the end of the day, institutionally, banks are constrained. And on the other hand, the demand side, the individual Muslims, they want to consume in the same way as the market conditions requires. And therefore, the two an inevitable position when it comes together, that is what we have in the Islamic banking and finance. While it is working and it has demonstrated success, but I feel that in terms of the spirit that we mentioned in the beginning, in relation to those spirits, there has to be new innovative ways of developing products, institutions, and structures, because somehow we have very well settled in the existing Islamic banking as the end of history. This is not the end of history at all. In particular now, looking at different academic institutions and the training institutions generating the new generation who are educated entirely in Islamic banking and finance and Islamic studies, I think now we are in a much better position to be able to bring out new structures which can reflect the whole spirit of Islamic finance or the Islamic ideals in financing and economics. Because bank by nature, as I mentioned earlier, is not an organic product of the Muslim societies. It's not because Muslim societies were not clever enough, were not developed enough, therefore they couldn't reach something called bank. No, the Islamic worldview did not allow to create such a structure and therefore they sort it out in the civil society, in the everydayness of life. They develop all these structures, because the structures that we are referring, they are business structures. They are not financial structures. And because in the periphery of the Muslim world, those business structure as business contracts were prevailing, and they were very successful. But when you push them into a structure that is bank and try to fit into that, of course, you have to go around, find the ways to make it possible. And in doing that, in the grafting process, you lose some of the features that you are aiming at, and therefore we are squeezing that. And therefore, my call for myself as well as my colleagues, whether it is in the Sharia, whether Islamic banking and finance, whether academia, we have to collaborate to find new ways, new structures, new products, and new institutions which can enable us to fulfill the how conditions, the justice, and etc. that we have put forward, the adala, the whole sharing economy. And these are important factors for us, because we have been heavily, as I mentioned, criticizing Islamic banking, creating this financialization. But on the other hand, as customers, I myself pushing Islamic banks to go further financialization because I want to go to holiday to X place. And in other words, our behavior as Muslims, we have to look at also our behavior. The saving culture is not there. Of course, the labor has been heavily commodified. It doesn't enable to create an environment in which you can save and buy later. And therefore, we want to grab everything today. I mean, when I compare my my generation's economic and financial behavior with the previous generation were very conservative. They were saving in order to be able to buy. So if they didn't have, they wouldn't have bought it. But now in our generation, of course, the money has become an intermediation, is easily reachable. But of course, the costs that it creates, not only financial costs, but costs on human lives, costs on environmental issues, the larger costs, the social costs that we are creating. And therefore, we have to look into how we can contain this financialization by looking at how institutions, perhaps, that we want to create are not necessarily efficiency oriented or maximization oriented, and how behavior of individual Muslims are not seeking to consume as much as possible and try to constrain ourselves as well. So there's the two sides of the equation that we have to focus on to prevent this further financialization that we see, because Islam does not allow financialization to happen. So our story and Islamic worldview starts good, converted into money, and in the end, again, is the good. So the relationship GMG. However, in the existing structures that we are operating, including Islamic finance, the entire story starts with money. Money transferred into commodity, good has disappeared, everything has become commodity, you can buy and sell, and then in the end, it turns into money. But the money, of course, doesn't have any inherited value, and therefore we cannot create value over money Islamically. And so we have all these dilemmas, and therefore we have to be innovative in our thinking to develop new structures, new ways of dealing with bank and finance, but at the same time, Muslim individual, how they have to look into not to contribute to that process and constrain our own consumption patterns and our expectations as well. Thank you.
Thank you.
Okay, before I actually go to the next question, if I could just ask Sheikh Khoory, because we're seeing a repeat of similar questions coming through on this subject of product structuring. Sheikh Khoory, what is the difference in the profit calculation versus the interest rate of conventional financing? As a lot of people tend to, when they sort of compare it like for like, seem to feel that Islamic financing is a lot more expensive. And also the process one has to go through to acquiring this financing is a lot more tedious compared to conventional financing.
Thank you, Farah, for this question. Okay, so the Islamic bank, as you have seen in the example of the Murabaha, goes through different steps and more steps and a lengthy process of documentation, of communication, of even human power and human capital. And all those are costs for the bank. So the conventional bank does not have to go to a dealer. It does not have to appoint someone to check on the commodity or the car. It doesn't have to do 2 contracts, one with the supplier and another with the customer. So all those steps create a layer of cost, or several layers of cost. Time by itself is a cost, human power are costs, documents are costs, and so on. And all those may, I would say may with 3 lines and a highlight with yellow as well on it, may justify that the Islamic bank can increase a bit its price. But what we are seeing today is that prices are doubled and tripled, and I'm not sure from where these costs are emerging. Because Islamic banks do have extra costs, but do not have extra costs to the double and the triple, I would say. And some banks have taken advantage and have taken the profits, or let's say the interest rates of conventional banks, and doubled and tripled them with no reason or justification or even logic. And that made the Islamic bank's reputation really impacted in the minds and the perspectives of Muslims, because they no longer trust that those banks are created for the benefit of Muslims rather than harming them with extra layers of cost and sometimes, unfortunately, hidden charges and hidden fees. Just one last thing I would like to mention here, and this is always a subject of debate. Are we allowed as Islamic banks to use the conventional rates as a benchmark? So in other words, if a conventional bank is using some form or some formula in order to calculate its price. So banks use today something called LIBOR, yeah? London Interbank borrowing rate. This by itself is a number. It's 6%, 5%. It changes every now and then. So if I take a number and put it in a halal context, then there should not be an issue. I'll give you an analogy. If I enter a market of food and they are selling chicken that are not slaughtered, they are electrified, and I introduce myself as the halal chicken provider, can I use the pricing of the electrified chicken, or it's haram? The number is haram. Yani if it is 10 pounds, it's haram. The number itself, 10, is haram. I don't think any sane person will say that the number 10 or the price 10 is a haram number, but it is where it is placed. If I place it under a liquor or under a non-slaughtered chicken, then yes, it is haram. But if I place it in a halal context, water or slaughtered chicken or so on, then it is halal. So I have to benchmark with the current market. I cannot help it. I have to use the rates of conventional banks and then build on it, because I am competing with them. They are the players in the same market. We are all in the banking market. Even though I call myself Islamic, they call themselves commercial or traditional banking. But at the end of the day, we are in the same market. So using numbers by itself per se is not an issue, as long as we use them in the right and the halal context. Thank you, Farah.
Thank you, Sheikh. In fact, you've pushed forward. The benchmarking was actually going to be one of the preceding questions. So thank you so much for bringing it on now. My next question is for Dr. Ziyaad. Dr. Ziyaad, there are many arguments that are brought forward on interest. And one such argument is that, interest is the reward for savings. It's a compensation that the creditor pays the debtor for the latter's temporary loss of the use of capital. Now, what are your views on this argument, and why is riba or usury prohibited? And what are your views then on a cash financing structure that is argued to have an absence of any real economic activity, thus creating interest in some form or shape?
Yes, this is, thank you very much, Sister Farah, and good to see you again. This is a huge question, and I think Prof. Mohammed and Sheikh Moosa have already covered this at different angles. The issue of riba can be summarized in a nutshell as something that is related to injustice. It is that unfair exchange that ultimately ends up empowering one person even more and moving the next person one step lower. So the hegemony that riba has caused in the past is well known. And I'd like to quote someone that comes to mind right now. In the year 2000, the former president of Nigeria, in fact, made a statement at the G8 in Tokyo. And, you know, forgive me for the figures and the memory, but basically what he said was he took, or the country had taken a $5 billion loan from the, you know, from the World Bank or IMF. And he says, we've paid back 16 billion US dollars. And now we're told we owe 23 billion US dollars. He says, if you ask me what's the worst thing in the world, I'd say it's compound interest. Now, when you look at that perspective, you realize that especially Africa, I mean, you're coming from Kenya, I'm from South Africa. When we look at the African countries and how they've been impacted by riba itself, then you realize that interest is used as a tool to basically loot countries' resources by those countries that have the capital to start off with. And even that capital to start off with might not be real capital, it's financial capital, it's in the air, and that can be described within the comparison of a real economy and the size of a real economy versus a derivatives market and the size of the derivatives market. So the massive differences between the two, and a rough example would be if the conventional banking market's value is at approximately 270 trillion US dollars, and the derivatives market is valued at around $700 trillion, then one has to ask, what is the basis of determining that value? Is there any real value, or is it something that's made up by brilliant minds, physicists, and mathematicians using mathematical formulae? Well, this is what happens when you, you know, put too much of an impetus on financialization, as Prof. Mohammed was talking about. Now, we need to be careful. You know, there's the philosophical argument, and Prof. Mohammed's been talking about that a lot. There's also that formative and substantive argument on riba and its prohibition. And there are famous scholars, you know, like Al-Qarafi, who have mentioned that the reason behind the prohibition of riba is just that unequal exchange. And then what ends up in the future is that someone is continuously a slave of another, a modern slavery, so to speak, a debt slavery. And that debt slavery is very difficult to overcome. Hence, you have that large, you know, protest against this debt-based system and promoting the concepts around risk sharing and adl or justice, and the overall promotion of socio-economic empowerment and upliftment, which is the ultimate Islamic economic objective, socio-economic empowerment and upliftment. So I know you've asked a very simple question, what is the prohibition of riba? And I know we've covered every aspect, or rather broad aspects, but really that interest has a much broader implication. We can talk about the real implications of it, and then we can even talk about the spiritual implications of it. And here, when we look at the prohibition of it in the Quran, then we realize that the injunctions are very clear. Whatever is doused with interest certainly is actually something that reduces and disappears in terms of all blessing. And what is you know, covered with charity and goodness and giving out voluntarily, well, then that grows, that continuously grows. And the words used in the Quran are extremely powerful. يَمْحَقُ اللَّهُ الرِّبَى, and how Allah subhanahu wa ta'ala destroys that riba, whether it is small or large, compound or simple. Every aspect of it and all those four categories of people that are involved in it, from the one who receives it and pays it and the one who witnesses the transaction, all, and the one who writes it down, all of these parties, kulluhum sawa, are in the same boat. So it's a huge prohibition. And that prohibition really stems from wanting to achieve societal harmony, the maqasid that Sheikh Moosa talked about, this whole objective of equality and justice that Prof. Mehmet spoke about. So I'm going to leave it there. Riba is a huge topic in itself as well.
Yeah, of course.
Thank you.
Yes, Farah. Okay, next question is to Brother Moosa Khoory. In your opinion, can Islamic banking be more competitive, especially in the new climate as we enter the fourth industrial revolution? So fourth industrial revolution is like digitization of banking and other industries.
Thank you, Abdullah. See, I would say, and we'll be very frank and open in this, the success of an institution has no relation to it being Islamic or not. The success of an institution all relates to whether the team, the leadership team in the institution follows the values of Islam or not. We may have an Islamic bank, but a leader who is not following Islam. And we may have a conventional bank with a leader, or another, I will not say a conventional bank, let us give us another company with a leader who is not Muslim, but he's following Islam in its essence and its values. And that's why Ibn Taymiyyah says a very great quote. He says, Allah subhanahu wa ta'ala makes countries who bring justice to its people prosper even if they are non-Muslim, and makes countries who are Muslim but bring injustice to their people to demolish and to reach to failure. And this is, we call it a sunan al-kawniyya. As Allah subhanahu wa ta'ala said, sunnat Allah walan tajida li sunnatillahi tabdila. These are the rules of the universe, legislated by God, that justice will bring prosperity. Those who follow the values of Sharia will get richer and better well off. And those who do not follow those things will always follow the path of failure. That's why Allah subhanahu wa ta'ala have said, وَلَوْ أَنَّ أَهْلَ الْقُرَىٰ آمَنُوا وَاتَّقَوْا لَفَتَحْنَا عَلَيْهِمْ بَرَكَاتٍ مِّنَ السَّمَاءِ وَالْأَرْضِ وَلَكِنْ كَذَّبُوا فَأَخَذْنَاهُمْ بِمَا كَانُوا يَكْسِبُونَ. If the people of the cities have just followed what we told them to follow, they would have we would have opened for them the barakah, the blessings from the sky and from the earth. And then another ayah, Allah says, وَلَوْ أَنَّ أَهْلَ الْكِتَابِ آمَنُوا وَاتَّقَوْا لَأَكَلُوا مِنْ فَوْقِهِمْ وَمِنْ تَحْتِ أَرْجُلِهِمْ. If the people of the book have followed what we sent to them, they would have eaten from above their heads and below their feet. And this is an analogy of following Sharia leads to prosperity and success. And I will reiterate, if an Islamic bank does not follow Islam in essence, it is following the path of failure. And if a conventional and normal and traditional company is following Islam by nature and by values and by essence, then even if the leadership is non-Muslim, they are following the path of success. Those are the rules of the universe by God. They don't know any nationality, they don't know any language, they don't know any religion as well. Thank you.
Thank you. Dr. Ziyaad, can you explain to us, can Islamic banking be more competitive, especially in this new climate, as a digital world, we can say?
Much has been talked about and written about on the issues of efficiency and that difference between Islamic and conventional. In other words, if Islamic banks say they are following the Sharia, they are achieving a higher order, then technically they should be more successful than conventional banks. But as Sheikh Moosa has said, it is really about your behavior, your actions, and the manner in which you present yourself as an Islamic bank. So can Islamic banks be more competitive than conventional? Well, there are two levels to look at. First, whether that competitiveness is going to be translated as only efficiency, profit maximization, and low loss ratios, or is it going to be empowerment, socio-economic empowerment and falah. You know, when Sharia or Islam looks at falah, prosperity and success, does it translate that as profit maximization? So not necessarily. There are so many dimensions to falah from an Islamic perspective. In summary, Islamic competition, Islamic banks can be more competitive, but they need to achieve that through empowering individuals, empowering companies, and ensuring that there is this relationship that extends beyond paper, meaning I push to you money, and whatever happens, you need to return that plus more. And if not, then we don't have a relationship any longer. So that formal approach or legal approach alone will not see Islamic banks distinguish themselves moving forward. And that would be a distinguishing characteristic or competitive advantage. So I'm going to leave it there. I want to say a little bit more on the issue of social banking, but perhaps that could be a future question.
Abdullah, sorry, do you mind if I add one last thing? I forgot to add it.
Yes, of course. For that, yeah.
Islam did not come to close any door that will serve humanity. Today, the fourth industrial revolution is bringing a lot of digitization, artificial intelligence, blockchains, algorithms, and Islam have never stopped Muslims from entering areas that will benefit them. When the Prophet ﷺ have migrated from Mecca to Medina, he found a contract that was never introduced in Mecca, which is called Al-Salam contract. The Prophet never rejected a new contract because it was new. He only brought some terms and conditions to create more justice in the contract that was available in Medina, and he never rejected it because it was new. So today we cannot reject any new form or new way of doing things, be it artificial intelligence or digitization or what any other means of creating and operating transactions, as long as they are serving the big pillars that we spoke about, the benefits of the people, justice, transparency, and so on. Those are the things we are concerned about, and we, as Muslims and Islam by itself, didn't come to close any doors as long as there is benefit for Muslims in it. Thank you, Abdullah.
Thank you, Dr. Mohammed. Dr. Mohammed, your opinion regarding this, how we can see the banks in coming future becoming more competitive in their services and products at this time?
I think it goes back into the existing regulatory environment. The major problem, of course, we are facing, as we discussed before, and in reflecting on some of the questions I'm seeing as well what has been said. Now, on the other hand, you have bank, the institutional logic of bank, whatever, because we have a number of people here, each one of us speak a particular language as mother tongue. And whatever we look at the word for bank in our languages, it is bank. So it's not an organic reality, it's an imposed. Whether you are in Arabic, whether you are in Malay language, whether it is in Turkish, whatever, in the Urdu, it is bank, okay? So it shows that it is transplanted. So that transplantation, of course, brings its own tensions, okay? And bank, therefore, by definition, is aiming at to maximize the shareholder value, the institutional logic of that. But on the other hand, the whole objective of Islamic finance, as we have been discussing, is very much of bringing that justice. In other words, extended stakeholders' interest. So you have two different institutional logic. So for Islamic banking to be able to survive and compete and become successful in the existing structure, the only way it has to do is becoming more financialized, fitting into, because existing structures, when we look at the financial sphere all over the world, is heavily financialized. So they would only accept you when you move into with the same structures. However, despite all this negativity that we have and forcing Islamic banks as well to become more financialized, and more disembedded in terms of losing the link from the real economy. So the pressure is there, this embeddedness pressure. However, in recent years, as you are referring, the fourth industrial revolution brought us different institutional logics, disruption. It disrupts the existing structures. Perhaps it is not ontologically challenging in terms of questioning what is capital, but at least the way it aims at treating capital is entirely different. So you have all these new structures through fintechs, the blockchains, but most importantly, equity structures are coming out, emerging in different parts of the world. And therefore, I feel that this is the area. And therefore, my earlier references to institutional and structural innovation. How, therefore, in order for us to be able to, rather than using the word competitively acceptable or achieving competitiveness, how much we can appeal to the larger Muslim world and beyond Muslim world, how we can be ethical, how we can come up with those structures which aims at distributing the wealth as well as the capital through all these equity structures, through all this crowdfunding, through all this microfinance. So I feel that our real presence is very much in such emerging structures. And that will give us the upper hand because of the whole philosophical view from Islam. That will give us a huge upper hand to be able to deliver the promises that we are referring, not only to the Muslims, but beyond that, non-Muslims. Indonesians have this fantastic definition, whatever the Indonesian conference you go, they will always define Islamic economics as Rahmatul Alameen. And that's an amazing definition that I really love it. And therefore, by going into these new structures, we should be able to, not only for the Muslim world, but the entire world, be the Rahmatul Alameen, bringing beneficence to everyone. Because by going into heavily on the banking side, we are unfortunately essentializing capital and the capital domination, as well as the institutional logic of banking being the shareholder maximization. However, our audience, once they have stakeholders in their societies, and therefore looking at large numbers of people all over the world, they are critical and they want to have a stakeholding in wherever they are, whether they are in the United States, whether they are whatever the parts of the world, whether in Japan, whether it is in Pakistan, Malaysia, in the GCC and etc. Everyone wants to be stakeholder. If you look at the surveys in terms of the entrepreneurship attitude in the GCC, you see that large majority of population, young people, wants to be entrepreneurs, and that requires startup capitals. And banks, even Islamic banks, are not going to deliver that. And therefore, we have to go beyond the banking structure, come up new structures, how we can respond to such demand so that we can empower the individuals on the street. Because in the current structure, banking dominated structure, as you can see, the most successful banks, where they are in the United States, where they are in London, okay? But look at in the COVID, what happened. These countries can produce the highest technology to wipe the entire population from the world through, they call it defense industry, I call it war industry. Yet they have failed to provide face masks for their people working in the hospitals, the health workers. They couldn't even provide face masks. You see the asymmetry here, because it works around capital rather than human. And therefore, how we can bring up this finance in relation to human well-being, whoever they are. And therefore, all these new equity structures, all these new ways of technological reach, I think it will give Islamic finance, rather than Islamic banking, Islamic finance, an important area for development, for innovation, and to be relevant. That's the word I have been looking for, to be relevant to the new generation, so that they can empower their life. I think that's an important competition area, competitiveness or the competitive edge for Islamic banking, rather than defining ourselves as Islamic banking as the end of history. No, it is just one of the institutions, and therefore what I call the Islamic finance fairs requires huge democratization. Democratization in the sense, all these different institutions have to emerge to respond to this emerging demand, whether the SMEs financing, whether the startups, the new ideas, entrepreneurship, microfinancing, crowdfinancing, etc. I think these are the areas for Islamic finance to be relevant, to be able to competitive or to capture the competitive edge in the world. Even when you look at the Western sphere, the whole ethical financings, the socially responsible investment, green areas, green financing are becoming important areas, and these are the relevance. These are becoming the new opportunity spaces, and by definition, philosophically, Islamic finance Islamic finance is socially responsible, is green by definition, is ethical by definition. So how we can essentialize those qualities in the institutional forms that we can develop and to be relevant and to be competitive. I think these are the new competitiveness areas for us to develop ourselves and to be relevant to the new generation.
Thank you, Doctor. Yes, Farah.
Excellent. So I think we've covered competitiveness in light of the digital transformation in quite some depth. In fact, Professor Asutay, thank you so much for that expansive response. You've just gone through 2 or 3 other questions that we had.
Sorry.
No, not at all, not at all. Thank you so much. Now, if I could just perhaps bring in the current climate that we find ourselves in today, which is the pandemic. Now, the COVID-19 epidemic has demonstrated its impact at, different strategic levels, be it public health, productivity, massive job losses, business shutdowns around the world, as well as affecting global supply chains and consumption. And the crisis is, seems to be holding the world in a real bottleneck, and nothing seems to stop this economic freefall. But notably, many people are trying to use history, however, to predict the likely future economic scenarios of this outbreak. They're trying to draw, some commonalities with previous crises, such as the 2008 financial crisis, and even the Great Depression of the 1930s. We see this come up over and over again in discussions. However, such arguments can be said are not valid in today's interconnected world that is very interdependent now more than ever as compared to the past. But if we read history, all epidemics, however, created paradigm shifts, pushing societies to a new normal. So we should expect the same thing with this epidemic, and we need to all be ready for a new normal, which requires adaptation and change. Now, with that, there's been so much talk about, things like a cashless society emerging in the near future and an emphasis on digital currency. So how, in your view, do you see the economic impact addressing the Muslims around the world particularly, and also the impact on the Islamic banking sector? If I could just pose this to Dr. Ziyaad. And the follow-up question to that is, are you involved in any particular projects that are looking into this?
All right, so let's begin with the first part. Yes, pandemic, COVID. I mean, we talk about blockchain as a disruptor and fintech as a disruptor, but we didn't imagine what level of disruption, a virus of this nature could cause. It's been talked about, but never, real life in our era at least. So therefore, we have not really understood the impact of it. Although we are in it, I think we talk about a post-COVID era, yet we don't fully understand or grasp what that actually means. So from a banking perspective, Islamic finance perspective, I want to say that there are a few angles here. One is the Islamic bank more resilient? Is it providing products that are different and more advantageous to the customers? Well, I think the other honorable panelists have already stated that Islamic banks are really forced to play with conventional banks. And therefore, you know, one has to look at this issue very carefully when you talk about Islamic banking resilience, when it's really so close to conventional. So this brings me to an important point, and probably what we should try to stay away from in the future, post-COVID era, where we look at a potential convergence. If we continue to mimic at such levels conventional banking, you cannot tell the difference anymore. So unless Islamic finance really focuses on real economy, you're not going to see those distinguishing characteristics, and whatever happens on the conventional side post-pandemic is what's going to happen on the Islamic side, really, because of the reliance on debt-based instruments. Now, don't get me wrong, there is a place for debt-based instruments. I do not believe, and I'm not one of those that says that you know, you need to remove all debt-based instruments, and that's simply because of a point that Prof. Mahmoud mentioned, or Sheikh Moosa mentioned, I cannot remember. He said, you need to think about the customer. The customer is also the one that molds the approach an Islamic bank takes right now, post-COVID. So when you go to a customer and say that, look, I want you to share in the risk, and therefore when you purchase your next property, ensure that it's on a risk-sharing basis. So when the markets go up, then we expect you to pay more, and when the markets go down, you know, we will then take less. Now, the challenge with this is the understanding and the knowledge of the customer. So the customer's got a very tight budget, and he's going to say, I've got X amount, and if your risk-sharing percentage goes up, that means that I'm out of my budget and I cannot afford it. So this brings me to that additional component going forward and what we're working on. We're really looking at a future of Islamic finance, not Islamic banking. Islamic banking is a pillar only of Islamic finance, the bigger picture being stratified, meaning the maximization of risk sharing can be practiced at the investment banking, joint venture, asset management level. Then you have your retail banks, and your retail banks seem to be caught in this conventional banking play. And it's very difficult to come out of that unless they really start thinking out of the box. But we believe that the future of Islamic finance lies in satisfying an additional pillar, which has been very informal right now. Now, we know what it is. It's really Islamic social finance. And we shouldn't have to say Islamic together with social finance, because social finance should be Islamic anyway. But nonetheless, we have zakat, we have waqf, we have sadaqah, and we have something which has been used for another instrument altogether, and that's takaful. Now, once you start utilizing these methods, you can actually create an additional pillar within the Islamic finance structure. So if you want to see how consumers can actually come out of COVID from an economic perspective in a much better way, then we say that this pillar needs to be built. It needs to be enhanced. We're talking about Islamic social finance instruments. And you know the statistic well. IDB's reported between 200 and 500 billion US dollars worth of zakat is available annually, just in the 57 OIC countries. Where does the money go to? If it's 3 trillion US dollars that's required to eradicate poverty, if we have an effective Islamic social finance system, then it just takes 6 years to eradicate poverty globally. This means that we have not been maximizing on that socio-economic empowerment level. And if we want to come out of this in a better way, at a higher level, at an equitable level, in a more just environment, then what we really need to do is look at how we can make that efficient. The collection of social finance more efficient and transparent, using, of course, AI, blockchain, etc. And then the disbursement of it to be more efficient and going to the people that are really in need. Once you raise the level of people above poverty, now looking at very tight imitations of conventional, that may begin to fall away. And now you can achieve the spirit of Islamic finance, we believe. And now we can talk about the bigger concepts of focusing on real economy, etc. So in summary, I'm saying in order to overcome the impact, the economic impact of COVID, we have a few products that have been there at Islamic banks, but really we need to maximize on Islamic social finance instruments to really take us out of this through blended enterprise financing for SMEs, zakat being used effectively within our environments, waqf really maximized. We know the Uthmaniyun and how they used waqf to such amazing heights. 70% in history is written to have been contributed through waqf budgets. So there is so much potential, which is completely untapped. And all of our energy goes into a retail banking scenario when it can be spent as well and diversified into other pillars as well.
Dr. Ziyaad, thank you so much. If I could also just get Sheikh Moosa's view on this.
Sure, Farah, thank you. Okay, Dr. Ziyaad, mashallah, mentioned quite a few things which were really relevant to the inquiry or the question. I may add that, I mean, if you think about it in general, like, let's take, I mean, the Islamic finance, first of all, as a holistic industry. And what are the pillars that are really making a difference between Islamic finance and its peers? And these are the things that will matter at the end of the day. We in Islamic finance have things that are not available in conventional and other areas of finance. And these are, again, I will go back to the values from one end, and also to the styles of investment, the styles of transactions at another end. So from both a legal perspective and from also the value perspective. And just highlighting again what Dr. Ziyaad mentioned, that in Islam, we don't have any bias towards investment-based or debt-based. It's all about what will benefit the society. But in the long run, we can see very clearly that the benefit of the society is linked greatly to those transactions that impact the economy. And those are the transactions that are usually linked to investments, linked to the bigger goals. And those don't lie in the current model that we have. Those are lying more towards the joint venture, the investment banking, the capital companies which create the risk out of the investment in order to create a hike in the economy, be it in education or in health or otherwise. So I don't have much to add, actually. I'm just trying to highlight the points that Dr. Ziyaad mentioned and I'm in agreement of. But maybe Professor Mehmet will have something to add on this, inshallah.
Thank you. I think, again, as mentioned, we are putting too much emphasis on the banking side of the issue. As I mentioned, the institutional logic of bank is not flexible enough to be able to respond to the crisis that we have around us, because this institutional structure is based on shareholder value maximization. So what happens to the stakeholders is not very much the concern of shareholders maximization paradigm. And therefore, whether it is COVID or whether other crisis, and that is not much relevant. And therefore, my earlier reference, how we can authenticate Islamic banking within the ideals of Islam, so that the crisis and the consequences of crisis can become an integral problem of Islamic banking in order to develop structures and responses. And that's, again, my call for innovative work, how, therefore, we can shape the nature of Islamic banking to benefit larger communities that we have. Otherwise, within the retail understanding, within the institutional logic it has, which we inherited from capitalism, unfortunately, is not going to be able to respond the crisis that we have around us. But again, my earlier reference to, rather than banking, the finance part, in the finance part, in the civil society, emerging structures, how those emerging structures that we can motivate perhaps to bring up necessary financing for those people who are in need, but also who wants to develop the entrepreneurships culture, for instance, which is very much important in the Muslim world. As for the, in recent years, of course, in the face of failure of Islamic banking to deliver the Islamic ideals of social justice, has shifted our debate, in particular Malaysia and Indonesia, has shifted our debate on zakat and waqf, and what unfortunately it is termed as Islamic social finance. I have problem with that because these are amazing structures, just shaping them as finance, but I use the same language. Okay, Islamic social finance has become the new debate because we were expecting a lot from the Islamic banks to deliver, but by definition of it, it cannot, the institutional logic. And therefore, zakat and fund, these are important and emerging new areas for us, the historical, reviving the historical institutions. Having said that, I think we have to consider one important factor. Everyone refers to importance of waqf, for instance, in the Ottoman tradition. And a lot of people have been giving example, one particular quotation. A Turkish guy has written this some years ago, and everyone quoting that. It says that, you know, the waqf was such amazing institution. You could born in the waqf, you were raised in the bank, in the waqf, you were educated, you got married in the waqf, you work in the waqf, and when you die, you are buried by waqf. That's a terrible notion of waqf, because it implies that waqf has not done anything to empower this individual. Because our objective should be, with the whole waqf idea, that our objective has to be how to help this guy in the waqf so that he can empower himself and go out, perhaps contribute to the expansion of waqf so that other people can benefit as well. So therefore, this static understanding of waqf is very much problematic. When I read any paper on waqf, everyone refers to the quotation as if something good. No, this is not good. Waqf has not done enough, it means that. And therefore, we have to move into a very dynamic area. I can see that now the waqf discussion, debate, and the practice is moving into more dynamic areas. Generating income and distribution of that income has become an important factor. And therefore, that's a positive sign in the positive direction. But again, there is another aspect as well that we have to consider. When the waqf was prevailing, waqf remained as part of the civil society, because historically the empires or the authorities of the time, they did not have particular social contract with their citizens. They were not citizens, they were subject. And therefore, they didn't deliver the public goods. So public goods, by definition, therefore, delivered by civil society with the generosity and the richness of those rich people. But now, in this new structure that we are all citizens in the nation state. So we pay taxes. In the GCC, it started as well, certain ways. So we pay taxes, at least in the large part of the world. Now we have that social contract, and in relation to that social contract, the state has to deliver certain public goods. But it seems that even the states are failing, and therefore they are shifting everything on the civil society again. So that part of the dynamic is important as well in our discussion, not to forget that, because I have seen certain research coming up in Malaysia and Indonesia suggesting that how waqf and zakat can be incorporated into the fiscal policies of the state. No way, because the failure of state in terms of budget deficit is not because they are giving amazing public services and therefore they fail. No, their failure, as we can see in the Muslim world, whether it's a corruption, whether it is inefficiency in their spending, unfortunately, all these negative issues happening. And therefore, we have to keep zakat and waqf out of the reach of the state as the strength of the civil society to be able to respond to crisis times. I mean, even 3 days ago, there was a short documentary in BBC showing that in the UK, how zakat and the charities, the zakat forum, for instance, was very much active to respond to the demand of the ordinary individual Muslims, while their application to get the universal benefit from the UK government would have taken ages to reach. But zakat immediately, or the waqf immediately respond to that. And therefore, these are important areas for us to consider. So Islam, therefore, as we can see, is a totality of way of life. It has particular objective function, the social justice, and therefore, if certain institutions are not working, how the social justice oriented institution have responded or can respond and can deliver. And these are important aspects. But my plea, perhaps, at the same time, unfortunately, this debt culture among consumers, individual Muslims, but also the encouragement by Islamic banks is something that we have to be really concerned, how to curb the debt culture. Even Pope Francis, for instance, a couple of months ago, he came out and said that this debt culture undermines the dignity of humans. And this is very much the message of Prophet Muhammad sallallahu alaihi wasallam. He asked refuge from debtness, okay? And therefore, in crisis, when it comes crisis times in particular, as we can see how that culture entirely undermines the societies in which we are operating. And therefore, we have to look into how we can circumvent that culture through Islamic banking, and how we can bring Islamic banking more oriented towards the real economy, rather than creating this debt culture, which encourages us as well as customer, and we encourage the banks on the other hand. And therefore, this cultural nature of consumption has to be reviewed in order to be able to respond to the crisis periods as well. Thank you.
Thank you, Doctor. I think we are running out of the time. I don't know if the panelists are available for 15 minutes more.
I'm okay.
You're okay? Sheikh Moosa, Dr. Ziyaad?
We have Maghrib here, so you will have to excuse.
Okay, no problem. Okay, then we will ask the last question. I will mix it also with the two audience questions. It will be the last question. Then if we have time, we will go for one more question from the audience. The question will be, what advice do you have for any of our listeners who may be looking to pursue a career in the Islamic banking sector? And what do you see will be the future trends? And if you can also recommend some books they can read further, inshallah. Let's start with Sheikh Moosa.
Thank you, Abdullah.
Okay.
First of all, the career. See, if someone would like to start a career in Islamic banking, my advice would be read a lot about Islamic banking before stepping into the bank. Because once you step into the bank, you will most probably be, maybe I would say brainwashed by the current systems, because the current systems do not necessarily live up to the expectations of those who founded Islamic banking. So I would first advise that feed yourself with a lot of knowledge before you step into this area. Second, look for the unique career paths. Look for the unique roles. Don't look to be an IT expert in general, or let's say, don't look to be a salesman. Look for something that is above that. So if you will become an IT, then become a specialist in fintech, Islamic fintech. Don't be a normal IT person. If you want to enter maybe the Sharia side, then you are anyway unique, because the others will not have the Sharia side. If you want to become a salesman, then have knowledge on how to sell from an Islamic perspective, adhering to transparency, to ethics, adhering to how sales should happen from a legal perspective as well. So again, back to knowledge. Learn a lot and see where you fit, because some people out of passion try to just push themselves to be part of this industry, no matter how that happens and no matter if it fits his personality or not. go back to your personality, go back to your passion, go back to your own values, and then fit yourself in the place that you will feel yourself working in, and you feel that this is your place, this is the role that will fit your own life goals, your own, let's say, career aspirations and personalities. This is from a career perspective. Just to end, not to take much more time, if you would like to read some books, Justice Mufti Taqi Usmani has a great book called Introduction to Islamic Banking. It's a very short one. It's available in PDF through the web. You can search it through Google. It's a very good book on that. If you want to go more technical, then I think you can read even, I mean, if you want to go into the technical side of Islamic banking, then the AOFI, AAOIFI, Sharia standards will be, I think, the best book to read. It's very technical, so you need to have some background before that. There are other books, but I will leave to Professor Mehmet and Dr. Ziyaad to share. They are more versed than me in those areas. Thank you.
Thank you. Dr. Ziyaad?
Jazakumullah khair. To follow a career, I agree with Sheikh Moosa, you have to be focused more on a specialization rather than just being a general practitioner. That will allow you to be able to contribute to the sector in a particular way. Now, this also means that you must have a strong foundation. And a strong foundation would mean that you'd need to understand the original or the founding principles, so that when these questions of, you know, riba and the issue of what does Islamic finance or Islamic economics really, try to achieve, then that knowledge is solid and it has been well understood, rather than looking only at product structures and how these things can be engineered, because that is really an outcome rather than understanding the premise or the foundations. So this is important to follow a career. Yes, fintech is the buzzword, so there's a lot of potential there, especially on the machine learning side. Shariah is a very dynamic environment as well. If you have a sound Sharia knowledge from a good and reputable institution, then there is a lot of future, to help communities, to guide communities with regards to finance and economics. What books should you read? Yes, I would also suggest Introduction to Islamic Finance by Sheikh Taqi Uthmani. There is, however, another book which I feel is very comprehensive. It covers every aspect of Islamic finance, and it's called Islamic Financial System, Operations and Principles. This is a book published by ISRA, which is part of INCEIF at the university. And it's a book that we use with our students. There is also another book published recently also from ISRA, and it's called Islamic Economics. Yes. And it's a huge book, very comprehensive, and it covers a huge plethora of topics, including the social finance issues and a lot of the issues that Prof. Mohammed has spoken about as well. It doesn't look at the banking per se, it looks at the worldview from an Islamic perspective and falah and how that can be achieved in the long term for society as a whole. So those are some of the suggestions that I can make.
Yeah, Dr. Mohammed?
Yes, thank you again. As mentioned, what we can do is distinct. That should be the question as career seekers that we have to look into, rather than going into very repetitive jobs, being a clerk in the bank. How with such an education, how difference we can introduce, that has to be concern for us as individuals looking for a career. And therefore, an important concern that I have to raise is I look at quite a number of Islamic banking, finance, economics programs offered all over the world. But I am worried that some of these training and some of these educational realms are providing training. In other words, how Islamic banking is working. And that's relevant, but that's not enough. The Islamic economics, banking, and finance programs have to provide the theoretical underpinnings for us, so that when we go and work in a bank, we should be able to make a difference rather than repeat the existing structures going on, because that curbs entirely the whole innovative understanding how new structures, new operations, new institutions can be emerged. And therefore, my particular advice, look into programs which are not training oriented as such, although they look very much the education, very much academic, but in reality, it is just a theoretization of the practice of Islamic banking. Because that is important to develop the critical thinking so that when we go and work in a bank, we should be able to make a difference. And that difference is an important part that we are looking for the continuous development. And also these emerging new areas, rather than just banking, but the emerging new areas. And in particular, this as referred as well, whether it is the fintech, whether it's the new structures, the crowdfunding areas, of microfinances, and etc. I mean, these are the exciting areas that we have to look into rather than just seeing Islamic banking as an option. In terms of education, quite a lot available, to be honest. Very good books mentioned, but I will add to that, look into Chapra's book, Mohammed Chapra's book, Muhammad Umar Chapra, to develop an understanding, in addition to a very nice textbook on Islamic finance. Again, Muhammad Ayyub's Understanding Islamic Finance has become a classic now, 2007, but it's an amazing classic. Yes, there are plenty of material, alhamdulillah, emerged now, not the unlike the good old days. Thank you very much.
Thank you, Doctor. I think also if you can visit the videos published in YouTube for all of the sheikhs and doctors with us, it will be also beneficial. Let's leave also the stage for some audience to ask a question. Let's start with Mustafa Ramadan. He has one question to one of the speakers. Further.
Hello, good afternoon. It's an honor for me to listen and get feedback from remarkable people like the speakers here. I'm doing a master's degree in international financial management in Switzerland, and none of the universities here offer any Islamic courses, even though they have Arab and Muslim investors. So I have a question for Dr. Asutay. I want to know, since none of the universities in Switzerland offer any Islamic courses or have done any Islamic finance research papers, then what are the incentives that drive global universities to offer Islamic finance modules and promote researches in this topic?
That's very interesting. There are two ways to answer that. One is the structured understanding, the other one is pragmatism. Pragmatism relates, you have one academic in particular institution who has developed certain interests in Islamic banking and finance. Therefore, she or he introduces this particular module or program. And unfortunately, when that person leaves or retires, that's it. That's the end of the story. And that happened in a lot of institutions in the world, in the Western part of the world. And then you have more substantive programs who have certain staff who have objective to constitute this as a worldview. And then, I mean, in the Western part of the world, such as our program in Durham is one of them, because our objective is to delve into an area to develop this as an alternative discourse and alternative system understanding. But again, at the institutions, how institutions can be supportive of that, because at the end of the day, in the Western part of the day, they would look at the work count. How many students are coming, how many output is produced as a research, and etc. So you have a lot of constraints. And therefore, and on top of that, you have, of course, ideological biases. They might think that, look, this is Islamic finance, why it is in a business school? It should be in the religious affairs department, and etc. Type of understanding the ideological bias, or perhaps entirely excluding. I mean, it was, I think, in 2015, Timur Kuran, one of the leading contenders in Islamic economics, who have been writing a lot, but he has this particular negative position in relation to Islamic finance. He doesn't see a value in it. He went on the Financial Times and he gave an interview that why British universities are allowing Islamic finance in the business schools. So that created the whole debate, why Islamic finance? And therefore, different attitudes developed by each university. In the UK, some universities wants to have this diversity. Some, however, have ideological biases. And therefore, the sustainability of such programs in the Western part of the world is very difficult. And also, as my colleague, Professor Zia identified, I think this is an interdisciplinary area. Squeezing that into a particular school can be difficult. Like you are in a business school, but you want to teach Sharia as well. Then that creates the whole problem, because they would say that, look, this is a business school, it's not a religious affairs department. So you have to go through all this negotiation here. However, in the Muslim world, we can overcome those either very specific universities, such as INCEIF was established, but also in Muslim countries, in the universities, again, establishing perhaps interdisciplinary centers or institutes within the universities, bringing Sharia, economics, finance together, and developing these programs will be much easier. But in the Western part of the world, you have to go through all those negotiations. I mean, my life has been through negotiations, being one of the leading universities in the world and trying to establish and sustain Islamic finance program is always negotiation. And therefore, the sustainability can be very difficult. At the end of the day, the efficiency issue that we were referring earlier, unfortunately, universities have become in the West very commodified as well. They look at the commercial value. So whether you have 30, 40, 50 students in the class or not. So these are important constraints, unfortunately, we have faced. But in Switzerland, in the past, when I say in the past, in 1990s, there was huge interest. Perhaps before London emerged as a center for Islamic finance, Zurich and Geneva, they were the centers, to be honest. One, in terms of large Arab monies parked there, GCC monies, so the management of those monies. And secondly, because of that, a lot of interest in Islamic finance emerged, and most of the conferences before coming to London, they were operating from Geneva, all those very professional conferences. But unfortunately, that could not be sustained because the British government took the upper hand, declaring themselves as a government policy rather than business sector doing themselves in Geneva and Zurich. London, as a government policy, stated that we want to be the center of Islamic finance. And therefore, unfortunately, Islamic finance activity in Zurich and Geneva terribly declined. But there are some new developments that are taking place. So watch the space, hopefully.
Inshallah. Thank you, Dr. Mohammed. I think the Professor Dr. Zia is going to leave, but before that, we have one important question from Nazir Ahmed. He wants to ask this question.
Jazakallah khair. Okay, I put 3 questions on the group. I just want to ask the main one quickly. In South Africa, Islamic banking is perceived to be a very Muslim thing. It's not seen by non-Muslims to be viable. In fact, it's not even visible to many of them. I'm not sure how that can be changed. We don't even have enough people trained in Islamic banking. Our Department of Small Business Development in government wants to adopt Islamic banking as an approach, and they cannot find a partner in South Africa. I'm not sure how those things can be solved. Sorry.
Okay, so what is the question specifically? So how it can be solved in South Africa, is it?
Yeah, I know it's more a South African problem, but I'm just throwing it. I'm not sure how it can be dealt with, because our local banks don't have capacity to deal with small business. Like our Department of Small Business Development, the minister herself specifically has asked one of our local Islamic banks to join in financing these small businesses in some way, and she was using the example of the Grameen Bank and so on, but we are unable to meet those demands, and I'm not sure if there is a way to do that. Maybe this question is not for this group, it's more about, You know, maybe it's too broad. Sorry.
Perhaps it is a bit broad, but South Africa, from an Islamic banking perspective, has actually grown significantly over time. And really, it looks after a very tiny community. As you know, Muslims are less than 2% of the total population of South Africa. So catering for that community also means that you can only offer particular products that would be attractive to that community. Now, yes, non-Muslim organizations and companies have taken and used Islamic finance, particularly because of the budgeting advantages from Murabaha and advantages around the diminishing musharaka, etc. So there are advantages that non-Muslim companies and non-Muslim individuals have seen in Islamic finance. Yes, South Africa may not have the capacity, but certainly there is opportunity to develop that market. And now that all the major banks in South Africa, or almost all, offer Islamic banking solutions through windows or particular counters, and of course you have Al Baraka Bank present there for many years, since 1989, you do have a very strong foundation for Islamic finance in the country. The country had issued a sukuk, I in fact had the opportunity to spend time training the Treasury and the Reserve Bank in South Africa. So there's a lot of potential that South Africa can actually harness from the Islamic finance philosophies, and they can actually spread that throughout Southern Africa. SMEs, that's an ideal opportunity to use venture capital and Islamic partnership methodology to support these initiatives. You do have the expertise to do that, and I do believe that the banks are skilled enough to achieve that right now.
If I could step in just to respond, because this is the heart of the problem that I am trying to identify. I think you are very much on the point that how Islamic banking have not been able to be innovative enough to bring up new structure to respond to the government's developing a particular policy, and they want the Muslim community to be part of that. And that is very much the constraint that I have been trying to identify, because the Islamic banking moves with very much the shareholder maximization, and therefore they cannot get out of that to respond to the SMEs, for instance, financing, because that implies that they will go into the larger risk areas. But Islamic bank, unfortunately, despite the fact that we teach is the profit and loss sharing, unfortunately they shift the risk, and therefore then it becomes terribly difficult to reach out to the SME sector, for instance, to provide it. And therefore my lamenting that we have to come up now, and not only in South Africa, but in the entire Islamic banking sphere, to develop such structures, how we can, because SMEs are the backbone of economy. And the Muslim youth, as well as the larger populations, they are in need of developing this entrepreneurship culture. And therefore, the financing has to be provided, because the structures that Professor Ziyaad mentioned, of course, they go into, if you need equipment for your SME, then Islamic bank comes. But you need a startup financing. So how we are going to provide that startup financing, for instance. And therefore, it is not a South African problem, but a general problem. It's an institutional problem. Therefore, the new generation now going through this training and education, hopefully with the innovative structures that we can come up. Also, the take-up of Islamic banking is not only your problem. I mean, Malaysia is a success story in terms of claiming very large share of the economy in Islamic banking and finance. But the largest two economies in the Muslim world, Indonesia and Turkey, I mean, look at the Islamic finance take-up, it's terribly low. Again, because it has not been able to appeal to the larger communities and the need of the larger communities. And this is an important factor that we have to expand our institutional understanding what Islamic banking is, rather than squeezing ourselves to be, I use the word relevance, and therefore how we can, Islamic banking and finance can be relevant to the young guys who wants to establish their SMEs, to the agricultural sector in the larger Muslim world who needs financing, which Islamic banks again are not delivering, for the manufacturing sector again. When you look at the distribution of financing in Islamic banking, it's heavily squeezed to real estate market, heavily to the consumer durables, and heavily to the financial sector. Therefore, we have to pull it up bring it to the real economy. SMEs, agriculture, manufacturing, these are the areas where we can create job opportunities. And therefore the institutional logic has to change to respond to that, inshallah. But we are hopeful. The development so far has been under huge constraints, and the conditions are, I'm feeling that much better. We have developed the intellectual capital through different programs in the world, and hopefully with that intellectual capital, now it is in this stage, what I call the third stage of Islamic banking and finance. We have to be more innovative to respond to such matters directly relating and to be relevant, as well as contribute to the policy, the public policy related issues.
Mm-hmm.
Thank you so much for that elaboration. And Dr. Ziyaad, I'm conscious that you do need to make salah, so we'll allow you to excuse yourself.
Very much.
Thank you so much for your time and answering all the questions. And inshallah, we look forward to inviting you on future series as well. Assalamu alaikum.
Jazakumullah khair. Thank you very much, everyone. Assalamu alaikum wa rahmatullahi wa barakatuh.
So what I will do is I'll just condense two questions before we close. I'm just cognizant of time, as Salah has also, the Adhan has also just gone off here in Dubai. This is posed for Sheikh Moosa. So one question that has been asked several times is on trading. So trading Forex, trading the stock market. And the question really is it halal or haram to invest in the stock market and to trade Forex? And the second question is, how does the bank decide on the charity partnerships to receive funds from the bank's charity fund, if you will?
Thank you, Farah. Forex, foreign exchange, and the capital markets and commodity markets and shares are in principle allowed. We cannot stop people from trading in currencies, trading in commodities, trading in shares. All those are halal in principle. However, there are some conditions, especially in currency exchanges. It has to be done on a spot. It should not be in future. There should not be a future dated transaction. But I want to give a highlight here for all those markets. The trend today in the world market of those areas, capital markets, shares, and currencies, is to speculate. And when I say speculate, it means that we are giving a wild guess whether this commodity or whether this share or whether this currency will hike up or hike down. And due to this, we are throwing, and literally throwing, I would say, our money and just waiting for some Kinder surprise to come up, which is, I mean, very sorrowful to see Muslims doing that. Although today non-Muslims are saying that speculation is anti-economical, it's anti-ethical, and it's not even, a logical way of doing investments. So I just want to give a note on this, because although you may seem to have completed and fulfilled all the terms and conditions from Sharia perspective, but if you know from the deep in your heart that you are doing this in a speculative manner, then this by itself is enough to make it haram, because you are throwing your money and wasting money and just disposing of money without consideration is haram in Sharia. It is a way of not appreciating the blessing that you have. Okay, so this is my note on that. The other one, the charity fund, I just want to clarify, Farah, is the question on utilizing the charity of the bank itself through collecting the late payment fees. How is it, utilized? Is this the question?
Correct, that's correct.
Okay, so we call this the forfeited income or the late payment fees. They are used for the general interest of the society. So let's say, so this is not zakat, this is a general charity fund which has in it the late payment fees that ought to reach at the end of the day some charity associations or charity causes. So we can use it in any way that will serve the society. There is no need for the zakat conditions to be fulfilled, but in general, anything that will benefit the society or individuals of the society can be used for this manner. Thank you. This is my answer.
Thank you so much, Sheikh. Over to you, Brother Abdullah. Brother Abdullah, you're on mute.
Thank you, Farah. I think we have to close now because we are running out of time. And I would like to thank Dr. Mohammed and Brother Moosa Khoory for being with us today. For whoever we didn't answer their questions, we will try to contact our speakers for getting the answers and send it to you by email. Or we might raise these questions in our next webinars that we will have it soon, inshallah. Be in touch with us in our accounts and in our social media accounts and by email also if you have any suggestions or for webinars. We are very happy to have you at any time. I would like to thank everyone who attended this webinar, and hopefully we'll see you all soon, inshallah.
Thank you very much. Thank you for having us.
Assalamu alaikum, Prof. And
salam. It's good to see you. Thank you.
Thank you very much.
It's good to see you, Moosa, as well.
Yeah, I really enjoyed this video. Thank you, Abdullah and Farah.
Thank you very much.
Thank you very much, Abdullah and Farah, for organizing it. Thank you.
Thank you very much. Thank you.
Okay, assalamu alaikum.
Wa alaikum assalam.